All right, so can everybody see the board okay, or do I need to kind of move it a little bit?
It's good.
All right, so a couple things. I'd like you to get your notebooks. I'd like you to do a little quick exercise real quick. What I'd like you to do is don't think about this too much. Just kind of right off the top of your head, and don't judge it. Just write whatever comes to mind. Write down 3 things that you want to get out of learning how to trade the way we do, making extra money, those types of things. Write 3 things down that you want to accomplish by doing this. And you don't have to share them with anybody, so don't worry. Everybody got it? You okay? Got it? Okay. All right. Now, what I'd like you to do is just for one more minute or so, I want you to read through your goals. And then I want you to tell me, well, read through your goals. Just go right back over, just read through them. Then I'm going to ask you a question. Okay. All right, now I'm going to ask you the question, and let's just be honest, okay? Would you raise your hand if the thought or something like this thought occurred to you? I could never do that. That could never happen. Anything like that, any kind of thought like that come to mind. Hey.
Hey. How you doing? How are you?
Okay. Okay. Sometimes you feel like it would be tough. You know, I've written goals. Has anybody ever written goals before?
Yeah.
Okay. All right. And do you feel like sometimes you're writing these goals out, but you think this is kind of a waste of time? You know, I mean, for whatever reason, I can't. That's not me. I can't do that. I won't be able to get there. I won't be able to do that. This is the thing that goes through our minds all the time, and it's just human nature. If we haven't done that thing yet, it's hard to imagine ourselves as doing that thing, becoming that thing. So we have this. I guess it's kind of a protective device that's built into our psyche. That's kind of basically, don't stretch yourself out there too far. You don't want to get disappointed. You don't want to, you don't want to act or feel like you failed at something. You don't want to feel like you tell somebody you're going to do something and they don't do it, and then that person, says something to you or whatever, right? So we've all kind of had that sort of thing, right? Well, that thing is what's called your story, basically. That's your story. We all have these things, like from when we were a kid, at different places in our lives, different things that we've gone through and we've done. And we've had things where we wanted to do them, and for whatever reason it didn't happen. Whether we stopped doing it, or it didn't work out, or situationally something didn't happen, right? But we've all had these things, and so we've all experienced not achieving things we set out to do. I mean, that's pretty much a universal thing. So what happens is, when this happens a few times, we kind of get this callus built over us, like, this never works anyway. This can never happen for me. Yeah, I can write this down. stupid guy in the front of the room is telling us to write this down, but, you know, there's a reason. There's just, you know, I can't get there because we all have that, okay? So as we go through this today, you're going to find out this is not rocket science at all. This is not hard. It's different, and it's going to take a little bit of time to get your head wrapped around it, but it's not hard. There's literally thousands and thousands of people that are doing this, thousands and thousands of people that are, you know, in worse shape than you are, that have more obstacles than you do, that have less intelligence than you do, all these things, and they have still been able to do it, okay? So, you know, one of the struggles that we have in life too, and I'll just make mention of this. So, you know, we teach this course. That's what the business is that we do. We teach how to do this kind of training. And many of you were at the live event we had. We had people come in there that have been through the course, and we charge a lot of money for the courses. It's you know, it's a pretty good amount of money. And the thing that we have to guard against is sometimes if we don't have skin in the game, like I strove to check for whatever to be able to learn this, sometimes that's going to hold us back as well. So did everybody bring your checkbook? No. No, but the thing is, you do need to think about that. You know, this you know, a lot of times when something doesn't cost anything, it doesn't have any value. But I'm just encouraging you to go beyond that, because there is serious value here in what we're going to teach you. You know, when I learned how to do this type of trading, which was way back in 2005, 2006, it literally changed my life. It changed the trajectory of my financial life. We were, you know, Linda was a teacher, I was a carpenter, banging nails every day. And, you know, I mean, I always wanted more for my life, for my family. Tried thing after thing after thing. Connor remembers, you know, all these different things. Nothing seemed to work. I tried all different kinds of investing, stock market, Forex, you know, all this stuff. Nothing ever seemed to work. I'd make a little money and I'd lose a bunch of money. So I found this strategy and studied it and learned it and began to do it, and had so much success so fast that we had all these people we knew were giving me money to trade for them. Just, you know, how good we were doing. So here's $5,000. Put this with yours and trade it, and I'll make some money on it. Now, literally, we built a business within less than a year of. I started trading this with $1,400. That's all I had. I put it in the account to trade it, and we started making money. And people, like I said, people adding money, wanting us to trade for them, and within less than a year, we were up to about $1.1 million. Growth and, you know, investors coming in, and it was just going insane. We were just making great profits. Now, we did hit the 2008 market crash, which was just a little while after that. We wound up losing some money in the market crash. You know, you will not win every trade you place in doing this strategy. You'll never win every trade at anything. Nothing is 100%. But, you know, we'll also not only teach you how to do the strategy, but we'll teach you how to manage the risk, what to do when markets move against you, and, you know, the things that you need to do. And after all this time, since then, I mean, I don't trade for anybody anymore. I mean, that's just too stressful, and I'm older now.
Wiser.
I don't need that stress in my life right now. I'm married. I got plenty of stress in my life. So the thing of it is, I guess what I'm trying to say is, when I started doing this, I had all those same fears. Nothing had worked for me. Nothing. I thought it was me. You know, just something wrong with me. Why can't I do this? And it just was the wrong vehicle. And when you kind of get this, when you understand it, And it may come today and it may not, but when you do, that light bulb will go off in your head and you'll understand how logical this is, how just how it works. It's so simple, but it's amazing. All right. And the other thing too is the majority of traders out there don't know anything about this. We're in the vast minority of people that know how to do this particular type of trading. But this is the type of trading that big professional companies do. They don't tell everybody that, but this is what they do. So we're kind of trading along with the professionals. The average people that are in the market are on the other side of the trade of what we do, and I mean, you'll see how it works together. You'll see how it's put together, but it's pretty cool. Now I've got to start with some basics. Some of it might be a little dry, just kind of learning the terminology, what we actually do. But please, anywhere along the journey here, if you got a question, just stop me. We'll come back. We'll make sure that I've explained it well enough and you're picking it up and all that. And after we're done today, Savannah is going to email you all a PDF. It's a 5 or 6 page PDF, and it's going to go over all the terminology and the things we talked about today, just so you'll have a reference for that. Okay. All right. So let's change the story. If you've had a story in the past that's held you back, we're going to change that. Okay. All right. So what we're going to talk about is, first of all, I want to differentiate what everybody thinks of as investing or trading versus how we do it, because there's a big difference. All right. So let's say you've got some money and you want to invest it in something and you're hoping for a return on that investment. I don't care if you're buying jewelry or you're buying real estate, you're buying a car and you want to flip the car, you want to buy stocks, you want to get in the stock market, whatever it is, you have to buy it. Okay, so you have to take money out of your pocket and go buy that thing, whatever it is, right? And you're hoping that the price will go up, right? If the price falls, if you buy a stock and the price falls, well, you're losing money. If you buy a car to flip it and all of a sudden you can't find anybody to buy it and you got to get rid of it for a couple $100 just to get it out of your front yard, well, you lost money, right? So anytime you're in a normal traditional investment of some sort, you're buying something hoping the price goes up. We've all heard the term buy low and sell high. That's how you make money, right? You buy something for a lower price, sell it for a higher price, you make the difference. All right. So that's the normal way to do investing. Now, what we invest in is the commodities market. If you can read my handwriting. And the commodities market is soybeans, wheat, pork bellies, crude oil, gold, silver, corn. We can do treasury bonds. We can do, there's all sorts. I mean, there's hundred and some odd markets that we can trade in. It's called the commodities market. It's also called the futures market, if you've heard that term. It's either called commodities or futures. Those are pretty much synonymous, slight difference. So instead of, everybody's heard of the stock market. Okay, we don't trade in the stock market. We trade in this market. And what most people don't know is this market dwarfs the stock market. This market is multiples larger than the whole stock market. It's a huge market. There's a lot of people trading this market, but it's mostly professional, like General Mills. General Mills needs wheat to make Wheaties cereal. So they trade in the commodities market to try and keep their prices stable, and we'll go over that another day. But it's huge companies like that that are buying into the commodities market. We are there, basically, we're trading in that market. The reason they allow us to is to add liquidity to the market. Because when General Mills wants to buy 1,000 contracts of wheat, there has to be somebody on the other side of that trade. The exchange doesn't do anything. It doesn't, I used to think if I wanted to buy a contract of corn, the exchange just had it on a shelf like Walmart, and they would sell me that contract. Well, that's not the way it works. I want to buy a contract of wheat. There has to be another investor that wants to sell a contract of wheat, and the exchange just puts us together. Okay, that's all they do, and that sounds like Jay and Lisa. Hey.
Hey, how are we?
That's all right. Come on in.
All right.
Hey.
Morning, morning. Hey, y'all.
Hey, this is Jay and Lisa.
Hello, we're the stragglers.
You can drag my chair up there,
Okay.
and there's one more right here. Like Sandy in the head. There you go.
All right, thank you.
Okay. Okay, so in a normal type of investment, you take money out of your pocket, you buy something, you're hoping the price goes up. If it does, you make money. Okay? Now, like I said, we're in the commodities or the futures market, but we're also, anybody ever heard of a stock option? Ever heard that phrase? Okay, so you have stocks, Tesla, whatever. There's a bunch of stocks out there. And the stock market also has what's called an options market on that, on the whole stock market. So instead of, if Tesla, let's just say Tesla costs, I have no idea, but let's say Tesla costs $500 a share to buy Tesla. So if you wanted to buy, 100 shares of Tesla, it's going to cost you $50,000 to buy that stock. Now they also have an option on Tesla that you can buy. And now there's a difference here too. If I buy Tesla stock, I can keep it as long as I want. I can keep it as long as Tesla is still on the stock market. I can pass it down to my kids. I can, you can have this. There's people that have stock in their family that's been there for hundreds of years. Okay, there is no expiration date on buying a stock.
But your share won't maybe be worth what it was at one point.
Or maybe it'll be higher or whatever.
But I mean, your shares are still gonna be there.
Right. However many shares I buy, I'm going to own, and the price for that share is going to fluctuate. Okay. So if I don't want to pull $50,000 out of my account to buy 100 shares of Tesla, I can come out and I can buy. I'll just mark it here. It's a call option. I'll define what call is in a minute. I want to buy a call option. Right now, the price is $500 a share, and I'm gonna say I want to buy a call option on a $600 strike price. Now I'm going to define all these terms. So I'm going to buy a call option at $600 on Tesla, and I might pay, instead of, this is going to cost for 100 shares, it's going to cost me $50,000. At a 600 strike price for 90 days, I might pay $450. That's what I pay. I still have to reach in my pocket, still have to come up with $450, but I will be controlling, I'm going to control 100 shares of Tesla stock for $450. But notice I had a time out here, 90 days. An option has a finite lifespan. So if you buy an option, you're not passing it on to your kids. It's gonna expire at a certain time. You can buy them, you can literally buy them a week out. You can buy them 30 days, 60 days. You can buy them a year. But they have an expiration. They have a lifespan. Okay. So I'm paying my $450 to buy Tesla at a 600, and I'll explain how that works in just a second. And I've got control of 100 shares of Tesla. So I'm sure you've seen price charts. So here you have the price, and down here you have the time. And you have a chart of whatever it is. It looks something like that. Okay, all seen that. So right today, the price of Tesla is $500. That's today's price on the chart. Okay, we are going to buy 90 days expiration. So we have until this point in time before the option expires. And instead of a 500, if I tried to buy a 500 call on Tesla, it would be probably close to that amount. It would be hugely expensive. So you usually buy and sell options far out of the money. So we're going to say $600 is right here. Okay. So I'm buying this. Now, right now, on the day I buy it, the only value that it has is what's called time value. Okay? Because what it basically is saying is I'm buying this slice of time from today to 90 days out. I'm buying this slice of time and hoping that the price will rise towards $600. If the price rises towards $600, my $450 option will be worth more. It'll go up in value. If it exceeds $600, if Tesla all of a sudden just went like that, that option is going to be worth a lot of money. Okay, a lot of money, which is great. If you're a buyer of an option, and a call option means that you are assuming the price goes up. Okay, so if you're buying a call option, you want that price to go up, and you want it to go up before that 90 days expires. And if it does, the value, that $450 you paid, that option might be worth $700, $800, $900, $1,000. If it exceeds $600, it's going to be worth well up into the thousands. Okay, it's worth a lot of money. Now, everybody kind of have that picture. Okay. Now, what happens? Just erase all this.
When do you get your money?
Well, when you're buying.
Okay, so it goes up over $600. When you collect your money, then you made a difference.
You have to either sell your option to get out of it at whatever the value is that day, or if it exceeds $600, you can do what they call exercise it, and you can actually own Tesla from $600, because that's what your strike price was. Okay, don't get bogged down with the terms and everything, but we'll get back to that. Okay. Bottom line is, I'm buying it here, but I'm buying an option up above it. With this time frame, it's costing me $450. If the price goes up, I'm going to make money on that option. Okay? Now, then that begs the question, what happens if the price kind of stays in here, or the price actually starts to go down? What happens then?
You're losing money.
You're losing money. The value of that option is going to start dropping. So it's going to start dropping for a couple of reasons. One, the price is actually getting further away from 600. Okay, so it's getting further away. That means that in this time period, it would then have to turn around and travel even further to get to the 600. So if it's hanging out in the middle, or it's going down, or even if it's going up, but very, very slowly, the value of this is probably going to be falling. The reason for that is that, like I said, remember, all we're paying for is time value. We're paying for this slice of time when we buy that option. So every day that ticks by, there's one less day that it could get to $600. Okay, so we started out with 90 days. And if it's just kind of not doing a whole lot or going down or whatever, now all of a sudden we got 89 days, we got 88 days, and 87. And if it's nowhere closer or it's less, it's got further to go with less time to do it. So that value that we paid is incrementally dropping down. Okay? So to be successful as a buyer in an option, you have to be right about three things. You have to be right about the price direction. So direction, if we put that option on and the price goes the other way, we're losing money. Okay? So we got to be right about the direction. The second thing we have to be right about is the magnitude of the move. Okay? It has to be a fairly substantial move up in order to make the value of this go up, because you're fighting against time every day. Every day time value is eroding just a little bit. So now that we got to be right about the direction, we got to be right about how far it goes.